Welcome back to The Contrarian, everybody. I'm Logan Moody. I'm honored to have Andy Schectman on today. When it comes to the structural shift that's taking place in the global monetary system, the ever more de-dollarized world that we're heading into, I don't think there's anyone more qualified than Andy to talk about this, at least in terms of explaining it in a good way of understanding. So thank you, Andy, for coming on today.
Yeah, it's good to be here, Logan. Thanks for having me, bud. I appreciate it. Thanks for the nice words.
Yeah. So maybe, Andy, I know at Rick Rule's investment conference last August, you really laid out very clearly, and I think maybe in the best almost summary I've heard so far, how what we've seen in the past few decades is finally coming to a head. Or I think a lot of people who maybe weren't recognizing it before are finally starting to see what's taking place under the surface. But maybe you could just take us through a lot of the historical events that have led up to what we're currently seeing, and just the ever more pressure to go away from the dollar, the shift away from the dollar that we're seeing.
Yeah, so this has been something, Logan. I don't know. It's an eerie feeling because I've been talking about this for 3 years now, at least, and even a little bit longer. And if you go back and look at the podcasts that I have done, really ad nauseum, it's been the crux of everything that I've talked about, going back since 2019 even. But I'll take you on a little journey. I've called it a linear progression of events. And these events, when I started talking about them, were fewer and further between. But if you took a look at the similar thread, or in the, I guess you could say, the coincidences that kept mounting that allowed me to follow this trail, it just started to make more and more sense. Whereas now these things are really accelerating, and you're seeing everyone talk about the BRICS nations. I've been talking about them since 2019 and knew that this was coming. So I'll take you on this chain of events and see if you can follow the same pathway that I did. And you'll see, I think, once you start to follow it, you can see where we're going. You don't need a degree in economics to see what's happening and where we are going. And I think that these types of events, when you realize that the Chinese are really in the center of it, this is a culture that thinks in terms of decades and in centuries, where we think in terms of days and weeks and even hours. So it's one of these deals where you can see the pieces are being put into place. So we'll go back to 2017 on our journey to the present, and we'll talk about the things that I saw that made me feel the way I do. So I've been doing this since 1990, and for 33 years. And so my frame of reference in these goings-ons, if you will, span 3 decades. And in 2011, we had $1,915 gold and $50 silver. We were at its all-time highs in both gold and silver at the time, when it then made a U-turn and embarked upon a 6 or a 7 year protracted bear market. And this coincided not only with the equity markets making all-time new highs, but Bitcoin growing from nothing to, by 2017, an investment that had really begun to accentuate itself. And many of my clients were questioning the wisdom of having a position in precious metals. The conventional wisdom at the time was, well, it's digital gold. It even looks gold. It's cut from the same cloth. I don't know if you want to call it decentralization. I guess you could, because gold and silver are assets that are not simultaneously someone else's liability. I guess you could say the same thing about a decentralized platform where you hold your cryptocurrency off exchange in your own Trezor wallet or whatever you want. It's slightly different, but in essence, I think people thought that the similarities between gold and Bitcoin were such that when Bitcoin started to really take off in 2017, it created capitulation to a degree in the precious metals industry. People were just aggravated. And after 6 years of watching it fall and Bitcoin going from obscurity to, making people very wealthy, we were seeing a lot of people sell their precious metals in 2017, along with the central banks of the world, which didn't make sense to me. I couldn't understand why the central banks would be so eager to sell their gold in 2017 and the years running up to 2017, but it just made sense. They were doing, I guess, what the public was doing. And that's where the journey starts, 2017. That's kind of the background leading up to it, where 2017 was an awful year to own a precious metals company as people were selling. 6 out of 10 sales we were doing were people selling. Now it probably is 1/2 of 100. I mean, out of every 100, maybe one, or 1 out of every 200, I guess is a better way of saying that. A very small percentage of people who transact business with us are selling. And it's always been that way, except for 2017 when everyone was selling, including the central banks. And out of nowhere in 2017, the German Bundesbank said to the West, look, we've been trying to quietly repatriate our gold for a couple of years. We want it back, and we want you to start sending it back now. And we demand that it's back before 2020, which is weird if you think about it. And if we're holding the gold of a sovereign nation like that, we ought to be able just to put it on a ship and send it over. But instead, it took a lot of time and kind of boondoggling, if you will, to the point where the German Bundesbank was making these statements through Reuters and Bloomberg and making a big hullabaloo about receiving back their gold, which was weird out of nowhere in an environment where banks have been selling. Why do they want their gold back? Now, as an aside, since the end of World War II and Bretton Woods, the US Fed and even the Bank of England have held most of the world's gold because these are the big trading platforms, COMEX and the London Metals Exchange, so that it would give the liquidity for these banks to transact. In any case, they said to the New York Fed, give us back our gold. Within a month or so of that happening, the Bank of Austria, the Bank of Hungary, the Bank of Turkey, the Czech National Bank, the Bank of Poland, they all said, hey, we want our gold back too, from the New York Fed and the Bank of England. And my dauber starts popping up at this point. Why are all these central banks buying back, or repatriating their gold when they've all been net sellers of gold for the last several years? Why do they want it back? And now I'm starting to do a little digging in 2017. And this is in fact, I remember doing a show at the Sprott convention at the time. Now it's Rick Rules, but when Rick was the president and CEO of Sprott Global US, I would speak at his show in Vancouver. And the name of that interview or that speech, which you can find on YouTube, I believe was The Art of Financial War. And I talked about misdirection. I compared and contrasted the writings of Sun Tzu, the book The Art of War, which is taught in every major business school on corporate hierarchy, in law schools on formulating arguments. It's mandatory reading at CIA and West Point. Bill Belichick, the football coach of the Patriots, who's so successful, uses it in game theory. It just became a way for me to make sense of a lot of what was happening. And I contrasted the suppression of the gold price by the central and commercial banks, along with the massive repatriation of precious metals. You can find that out there, The Art of Financial War. I started talking about this in 2017. So 2018 rolls along, and those same central banks who quietly well, at least in terms of all of the ones I mentioned, with the exception of the Bundesbank, repatriated their gold, also started on a massive buying spree. And in 2018, those banks as a group bought more gold than they did in the 60 years previously combined. Out of nowhere, they start going on a massive gold buying spree. Coincidentally, those same banks right now are buying up to 10 times what they bought then. Right now, we'll get to that as we get closer to where we are right now. So here we are in 2018, a year after they repatriated the gold. Now they go on a big gold buying spree. And I'm really getting interested. In 2019, those same banks bought 90% more than they did the year before. So 2018, you got them buying more gold as a group than they did in the 60 years previously combined. And in 2019, those numbers were up 90%, almost double what they bought the year before. Now I'm really getting interested. And then we get the bombshell. And that bombshell, the very first bombshell, or let's call it mile marker number one. There's 4 or 5 mile markers in this journey that have me convinced that we are heading to a place that is going to change the way of life that people in this country are used to anyway. It's going to be a different existence if things play out the way that I think. But that first mile marker was the Bank of International Settlements reclassifying gold as a tier 1 reserve, as a high quality liquid asset on par with dollars, cash. Since the end of World War II, there's been one tier 1 reserve, and that's been US dollars and US treasuries. And a tier 1 reserve is a riskless asset, according to the central banks. And out of nowhere, the BIS, the Bank of International Settlements, which was the central bank or central bank, decided to reclassify gold as the world's only other tier 1 asset. Let me just say that slowly. The world's only other tier 1 reserve asset. Now let's take a look at the 3 years leading up to that. Does it make sense that the Bundesbank made a big deal about repatriating its gold? Does it make sense that Germany, Austria, Hungary, Poland, Czechoslovakia, and many other of the Eastern European central banks repatriated their gold and started going on a gold buying spree 2.5 years before the BIS announces that it will be reclassified as a tier 1? Or does it seem more probable that the BIS quietly to their members banks laid out a framework of what was coming and said, you all need to get your house in order. You need to start to accumulate gold and repatriate that in which is outside the borders, because gold is going to have a central theme in what comes next. I would choose the latter, but we'll continue down this road and you tell me what you think.
Yeah.
So in 2020, we get to a point where the banks again are massively accumulating gold, but we begin to see some other things that make me pause and wonder, something bigger is going on here. As an example, we see the International Monetary Fund, which is almost 200 countries from around the world, that was formulated at the Bretton Woods Convention at the end of World War II. At the end of World War II, the Allies met in Bretton Woods, New Hampshire, and anointed the dollar the world reserve currency, taking over for the pound sterling, and did a lot of things like peg gold to the dollar at a fixed rate of $35 an ounce, classified gold, dollars and treasuries as a tier 1 reserve asset, formulated the International Monetary Fund. The IMF was formulated at Bretton Woods. So here we are in 2020, and 60 years or 80 years later, rather, and they're saying, all these countries from around the world say, we want a new Bretton Woods, a new system. They publicly say on their website. Now things are really getting interesting. Now you've got the IMF saying we want a new system. We see a rise of a group of reportables on the Commitment of Traders report, which, let me back up and explain what that is. The COMEX market is the commodity exchange here in the States that sets the worldwide price for commodities. And the exchange publishes something every week called the Commitment of Traders. It's a report that shows the positioning of the largest traders on the exchange, only the largest, And typically it was two brackets. You have the commercial banks and the hedge funds. They call them the specs. The specs would be big funds, money managers that are trading large allocations of gold and silver contracts for investment. The commercials largely are the banks. Now, the commercials have a wider designation. Even a company like myself who hedges gold for legitimate purposes would be considered a commercial. But for this discussion, the commercials are JP, Goldman, Citi, Bank of America, those types of players. And the positioning of those largest traders would be on the COT report, COT, Commitment of Traders. And for all my career, every week it was just the hedge funds or the specs and the commercials. Out of nowhere in 2020, we see the rise of a third group of reportables, and they are called the others. That's what they title it, others. And they are believed to be sovereign wealth funds and family offices. We can call them the most well-funded, well-informed, influential private traders on the planet. And they start draining the COMEX market in 2020 to a degree that no one's ever seen before. An exchange that was never established to be a delivery mechanism, all of a sudden Pandora's box was open. And we see in the year 2020, this group, the others, the most well-funded and well-informed private traders on the planet. Now, 3 years previous, you see all sorts of goings-ons with the central banks and their clandestine accumulation and repatriation of gold. And now, out of nowhere, there's just a coincidence that the others pop up on COMEX and start to drain the exchange. I would submit that these people either are the central banks wearing a different hat or are very close to the information. And in 1 year, we saw as much silver taken off of the exchange as we saw in the 10 years preceding. We saw as much gold taken off of the exchange as the Bank of Japan holds in their official holdings. This is a trend that we have seen to this day, which we will get to later on. But in 2020, you see the IMF say we want a new Bretton Woods. The central banks are still massively accumulating gold. And now you get these private traders off of COMEX that come up out of nowhere that for all the years I've been reading the COT report every week was just the commercials and the specs. Now there's the others. And the others are taking possession, which is something we never have seen before. Now it's all starting to, at this point in 2020, I'm all over YouTube saying this is happening. You have COVID, you have Nancy Pelosi in her House Subcommittee Finance bill saying viruses can live on currencies. We need a digital currency. In March of 2020, I said, it's coming. A central bank digital currency is coming. And I surmised it would be pegged to gold because it's the only other tier one reserve asset in the world. And why the hell are all the central banks gobbling it up and repatriating it? Preceding the announcement of its reclassification, and why are these others draining the COMEX, and why is the IMF asking for a new system? Do you see these pieces are starting to come together? And I'm everywhere screaming about it in 2020. And I had no idea where we would go from there, that it would actually lead to where we are now, but we'll get there. So as we are right now, do you have any questions up to this point?
Yeah, there's a lot you mentioned that I might like to get into a bit later, but
all right, well, I'll continue, and then you take notes and we'll go through each one.
Okay.
So we're still in 2020, and we see what I believe is mile marker number 2. Now, mile marker number 2 started a little earlier than 2020, but by 2020, it's really taking shape. And that is something, and when I did this presentation at Rick Rule's conference, I said to the audience, and when I go to Rick's conference, his attendees are the most well-informed and influential or wealthy. Influential is the wrong word. Well-informed, well-read, and well-heeled private investors that I speak to. These are people. Rick is a genius and has a very large following and accredited investors and people who know what's going on. And when I stood in front of them, I said, at the onset of my speech, I said, I'm going to give you these 4 or 5 mile markers. And I want you don't have to raise your hand, but I want you to think as I go through them, have you ever heard of this before? Now, again, everyone's talking about this stuff now. They weren't when I was talking about it, or even 6 months ago when I did, or 5 months ago, however long it was, when I did Rick's show. Um, Mile marker number 2, the Chinese Belt Road and Rail Initiative. Now, when I was talking about this in 2020, no one knew what it was. But it is probably something that everyone should understand vehemently what it is. And it is the most ambitious infrastructure project ever attempted in human history. And it is connecting kind of the old Silk Road, Asia and Africa, parts of Europe and South America. And it is China's ambition to connect all of these countries and build an infrastructure. On the Belt Road Initiative, you have, as an example, all 13 OPEC producing countries. You have, in terms of global population, it's approaching 70% of global population, human population. 45% of global GDP before industrialization. This is no small deal. It is not just connecting these countries with bridges and roads and railways and maritime channels, but it's also connecting them digitally. So I start saying, look, the need for silver in this infrastructure project is enormous. You are connecting 70% of human population digitally as well in a digital and green environment. Silver started taking a very significant role in 2020, talking about the future prospect for it. But anyway, so in 2020, we have the rise of the others. We have the IMF asking for a new system. We have the Belt Road Initiative. We have the banks accumulating and repatriating gold. You can see things are starting to really take shape. 2021 rolls around and we see massive gold acquisition by Russia, by Turkey, by India, by Poland, by China, by Kazakhstan, by Hungary, by Thailand, by Japan, by Brazil. They're all gobbling up gold, and you can go to their central bank websites and see this. And it took a lot of digging for me to see this, but hey, you can see they're buying up a tremendous amount of gold. And in September of 2021, we hit mile marker number 3, maybe the biggest event in all of our lives moving forward. But I will ask you, and just like I asked everyone at Sprott, do you know what makes the dollar the world reserve currency right now?
Yeah, I've heard past times when you've gone through this, and isn't it the pegging to oil that makes
right? And
yeah.
Yes, and so you've heard it. And when I ask most people, I moved to a country club in southern Florida from Minnesota a year and a half ago, and I have the good fortune of playing golf 2 days a week on the weekends, and we play in some games each week. There's 40 guys that play in these 2 games, and you get a new partner every week, each day, Saturday, Sunday, and you know, you play skins and whatnot against the field, against all the 40 guys that play in these games. The country club I live at, and a lot of these gentlemen are very sophisticated investors. Some of them are money managers. They're all fairly well-to-do, and I would ask them, do you know what makes the dollar world reserve? And most people I would talk to have no clue. Even the clients I talk to, no clue. And so after World War II, the dollar was pegged to gold at $35 an ounce to central banks of the world, not to individuals, but other countries could always exchange their dollars for gold at $35 an ounce. It was a gold-backed currency. It made a stable exchange rate. It allowed us to have trust or the trust of the world that, hey, take our dollars, do what you want with it, even give us your gold. We'll pay you $35 for it. You can always buy it back for $35. With the proceeds of the gold that we pay you for, you can buy our treasuries. You can earn interest on your gold stockpile, and you don't have to worry about storing it. We'll hold it for you safely over here. You know, Europe's gotten bombed over the last 2 world wars, and the infrastructure is not what it was. Send it over here where it's safe, where we have the best military and the best economy, and we'll hold it for you. And we promise we'll sell it back to you at $35 an ounce, what we paid you for it, anytime you want. Good deal. They got to buy our treasuries, got to earn interest on a non-interest bearing investment. got to help stimulate our infrastructure through buying of our treasuries. Everyone won. And as we got to the end of the Vietnam War, President de Gaulle of France realized that we were printing more dollars to fund the Vietnam War than we had backing it at Fort Knox. And he sent warships filled with dollar bills to New York Harbor. So give us gold. And we did. And we bled down the majority of, over half, I believe, of the gold held at the Treasury over a couple of year period. And Nixon closed the gold window in August of 1971. At that point, the dollar was no longer backed by gold. It was a fiat currency. 3 years later, Henry Kissinger was dispatched to Saudi Arabia and struck a deal with the Saudi kingdom and said, we'll protect you. No one will ever mess with you. We will provide you munitions. We'll teach you how to use them, and we'll provide you military support. We'll call it a joint military cooperation agreement. And for that, you and your OPEC producing members will only value oil in dollars. And it made sense to do this because, you know, since in the 40 years leading up to this, the dollar was everywhere as the world reserve currency. Everyone had dollars around the globe. So making it the petrodollar, making it everyone had to accumulate dollars to buy oil just made sense. We had the strong military. Everyone had dollars already because it had been the world reserve currency. It just made sense. So our protection of Saudi Arabia, and by extension, the OPEC countries, made the dollar the world reserve currency. So let's get back to 2021. Mile marker number 3. First one is gold being reclassified tier 1. The second one is the Belt Road Initiative. Mile marker number 3, the day we leave Afghanistan. If you grew up in the United States when I did, I'm 52, and any generation before me, the concept, even in a movie, of leaving someone behind enemy lines, a soldier, a serviceman or woman, behind enemy lines would have been considered unfathomable. Would never happen. Movies would say we never leave anyone behind, and it would be a mission to go behind enemy lines and rescue the fallen soldier. Never would happen. The day we left Afghanistan was an embarrassment to this country. We left our own American servicemen and women behind enemy lines. We left the Afghan freedom fighters who trusted us as our allies behind enemy lines. And worse than that, we gave the Taliban their biometrics and they knew where they were. It was a death sentence to some and an embarrassment to this country. To me, I was embarrassed for our administration. And there's no coincidence to the timing of this announcement as people are hanging from the wing of a large transport plane. Russia and Saudi Arabia announced a joint military cooperation agreement. Let's say that one more time. Russia and Saudi Arabia announced a joint military cooperation agreement. What? I thought we protected Saudi Arabia. I thought that's what made the dollar the world reserve currency. And the next day, Nigeria did the same thing. What? Nigeria is an OPEC producing country too, aren't they? Yes, they are. So now you have a country that possesses nuclear weapons, including hypersonic nuclear weapons. And the day after that, the State Department comes out because Russia announces simultaneously that all of our nuclear-powered submarines are fitted with the hypersonic ICBMs. And they came out and said on an article on Zero Hedge that we're very concerned about this. We don't have that technology. These are the missiles that go into the stratosphere at like Mach 7 and hit the ground at the speed of an asteroid. They can't be knocked down. And it was their way of saying, don't even think of messing with us the way you did Saddam Hussein and Muammar Gaddafi, both of which said they were going to sell their oil for gold or dinar or whatever it may be, euro. And so here we have, for the first time in 50 years, another country stepping in on providing protection to the Saudi kingdom. And at that moment, I came on in September of 2021, and every podcast I have done since, saying the dollar's days as the singular world reserve currency or as the petrodollar have just ended right here today. And I'll get to where that becomes more clear as we get to 2022. But this was a huge, huge deal. And I don't think people understand just how big of a deal it truly is. You know, there's this guy, Klaus Schwab. Klaus Schwab from the World Bank in 2019 said there'll be a great reset and you'll own nothing and you'll be happy and you'll rent. And I thought the guy was a moron. But think about it for a moment. You have more money created in the past 3 years than in the history of the country combined. You have over 50% of every dollar ever created in the last 3 years in the history of the country. 50% over of every dollar ever created in the history of this country was done in the last 3 years. And where did all that money go? Went into assets that got blown sky high: stocks, bonds, real estate, cryptos. And they're all inversely correlated to what? A rise in interest rates. So I'm just going to throw this out there before I continue. What would happen if Saudi Arabia just decided to say, hey, we're no longer going to sell oil just for dollars, and every country on the planet dumped dollars because every country on the planet has had to own it to buy oil for the last 50 years, and now they don't anymore? Well, what if they all start to dump dollars as it becomes a hot potato? Dollars come home, creating hyperinflation, interest rates go to the moon, and what happens to everyone who thinks they're wealthy in stocks, bonds, and real estate? It's the Great Reset. It's the setup for the Great Reset. But let me make it even a little bit worse for you as we talk about what's happened in 2022, and we can, I think, see that this is indeed happening. So in 2022, we see Russia kicked out SWIFT system. And I wonder if this was an intended act or an unintended act in terms of the consequences we will face. When you are the steward of the world reserve currency, it is not your job to tell who can and who cannot use it. And by weaponizing it, it has incentivized the majority of the world to move away from the US dollar, to find an alternative source of clearing and not using the SWIFT system, because countries like China, who have sold treasuries for the past 8 months in a row, 150 billion in treasuries, they're not buying them anymore. Japan's not buying them. Saudi Arabia is not buying them. Russia's not buying them. All of these countries are selling treasuries. Why? Because they're thinking, are we next? If we go after Taiwan, are we next? Saudi Arabia is saying, if we join the BRICS nations, are we next? All of these countries, I believe, look at the US as hypocritical, look at the Western hegemony as something that they would love to break free from, but they've never had the ability to do it. These countries are not strong enough militarily or GDP. Their economies aren't strong enough. They need the US until they don't. And I think mile marker number 4 would be the weaponizing of the dollar and kicking Russia out of SWIFT, because everything, I believe, has changed since then. So, 10 or 20 years ago, 30 years ago, this stuff wouldn't happen. Now you're seeing, when you look at China and India and Russia and South Africa and Brazil, the BRICS nations combining their GDPs, and we'll talk about what happens when we add all the other countries to the mix. Things start to get a little bit different, including militarily. You have Nigeria and Saudi Arabia selling their oil to, now for the first time ever, to China for something called the yuan, petro-yuan bond, where these countries, and you think of, how does a country like Iran sidestep all of the Western sanctions? Well, they sell their oil to China for yuan, a bond called the Chinese petro-yuan bond, which is immediately convertible into gold on the Shanghai Gold Exchange. And so this is why the Shanghai Gold Exchange has delivered almost 100 times more gold than the COMEX market has over the past several years, because these countries will sell their energy to China. China will pay them in the petro yuan bond, which they don't want. They'll take that bond and convert it into gold like that on the Shanghai Gold Exchange. It's immediately convertible. So this is how it's happening. So you have Nigeria and Saudi Arabia actually selling their oil for the first time in a currency other than US dollars to China for the yuan denominated bond. You have along the way Turkey. Their president wanted to, in 2022, says to the world, we want to buy Russian energy with currencies other than the US dollar. And I think it's interesting to note that in the first 7 months of this year, no one bought more gold than Turkey. Russia and China announced that they were coalescing together to build a new world reserve currency. They announced that a few months ago. So you have China and Russia saying the BRICS countries are going to issue a new world reserve currency. And they have come out, the Russian finance minister, and said that the new world reserve currency that we will build will be pegged to commodities. Now, one thing that I neglected to mention on the Belt Road Initiative was that for the last 3-4 years, all of the contracts, or the majority of the contracts on the Belt Road Initiative, the largest infrastructure project in human history, are settling on the new Chinese digital yuan. The digital yuan, let's call it a beta test, if you will, a 4-year beta test to the tune of 25 billion in successful transactions, have all settled on the new digital yuan. And I think that will be the rails of a future digital central bank digital currency. We'll get to that in a moment. So all of these things are starting to come together, and you start to see other countries saying, hey, maybe we should join too. And that's when it gets really very, very interesting, because we start to see countries like Iran, Venezuela, Argentina, Mexico, Egypt, Saudi Arabia, Turkey, all of these countries, many of which are US friendly allies, say we want to join the BRICS nations. And this is a very, very big deal. In fact, just the other day, the Russian foreign minister announced over a dozen new countries are going to join the BRICS nations. Algeria, Argentina, Iran, they've already applied. The United Arab Emirates, Nicaragua, Turkey, Indonesia, Senegal, Nigeria, Afghanistan, Egypt, Kazakhstan, and Saudi Arabia all just applied. They talk about the BRICS plus nations, where these are the next countries to either have already expressed interest or will be invited. These are countries that have influence, considerable influence within their own backyard. As an example, in Latin America, you have Brazil as one of the BRICS members. Argentina will be brought in. In Central America, you have Nicaragua that they are going after to join BRICS. In South Africa, you already have South Africa as one of the charter members of BRICS. So now they're inviting Algeria, Egypt, Iran, Saudi Arabia, and the United Arab Emirates, Nigeria, and Senegal. In Russia, one of the charter members of BRICS, you have Kazakhstan and Afghanistan. And you'll notice a lot of the countries that have been invited, like Iran and Afghanistan, are countries that we have had issues with. And so they are all coalescing against the Western hegemony and hypocrisy. In Central Asia, you have India and Indonesia and Thailand. And Indonesia, and this is all either in Central Asia or Southeast Asia. And so you have all of these countries that are all joining the BRICS nations now. And when you put it together with the Belt Road Initiative and the Shanghai Cooperation Organization, all of these groups are starting to represent close to 85% of human population. In the next batch of countries that they want to invite are, and they've just announced this, Costa Rica, El Salvador, Guatemala, Honduras, Panama, Bolivia, Chile, Cuba, Ecuador, Peru, Uruguay, Venezuela, Azerbaijan, Mongolia, Pakistan, Turkmenistan, Uzbekistan, Pakistan, Sri Lanka, and Vietnam. Now, it's interesting when you hear all of these countries, it just came out that a gold holdings as percentage of reserves. Check this out. Venezuela, 82% of their reserves are in gold. Uzbekistan, 65%. Kazakhstan, 63%. Bolivia, 55%. Belarus, 40%. These are all countries that have either expressed interest or been invited to join BRICS. Turkey, 29%. Bought more gold than anyone in the world for the first 7 months of this year. Pakistan, Kyrgyzstan, all of these countries are joining. Uzbekistan, they're all of them are massively accumulating gold. When we talk about the Shanghai Cooperation Organization, China, India, Kazakhstan, I can't ever pronounce it, Kyrgyzstan, Pakistan, I can't even pronounce it, Dagestan, Uzbekistan, they're all full members. Afghanistan, Armenia, Azerbaijan, Bahrain, Belarus, Cambodia, Kuwait, Maldives, Mongolia, Myanmar, Nepal, Saudi Arabia, Sri Lanka, all of these countries are Shanghai Corporation partners or observers. And when you start to put all of this together, all of these countries that are joining together against the Western hegemony and hypocrisy, that's what gets everyone to the table. It is now approaching between 80 and 90% of human population. They're all joining this group. But what gets them to stay at the table is the pegging of commodities using the distributed ledger technology that has been successful for over 4 years of the Chinese digital yuan, which I believe, if you listen to what the Russian finance minister said, we will issue a central bank digital currency that will be pegged to commodities. What better way to roll out a new central bank digital currency where you have 85% of human population gathering together against the Western hypocrisy and hegemony, having it backed by gold, which is what? The world's only other tier one reserve asset that is being massively accumulated by the central banks, more so than at any time since 1967. The central banks are voraciously accumulating what is considered the only other tier one reserve asset next to US dollars. They are telling us that their new currency will be pegged to commodities like the only other tier one reserve asset, which they are all accumulating. They have the distributed ledger technology. And what about the countries that are doing this? The RICS and BRICS, Russia, China, India, South Africa, they have all of the majority of the world's commodities, whether it be fossil fuels, whether it be rare earth metals, whether it be gold or silver, whether it be fertilizer. I mean, you go down the line, these are the countries that have all of the world's commodities, and the countries that are joining. How about the fact that all 13 OPEC producing countries are on the Belt and Road Initiative? How about all of these countries are joining together, and what gives them, I mean, so much so that China is building the first ever railway between Iran and Iraq, mending fences where countries have hated each other for centuries. But you know the old saying, my enemy's enemy is my friend. And they're all rallying together against the West, coming together to unite against that. But the glue that makes it stick is the pegging of commodities to a distributed ledger technology that shows everyone, yeah, here's what is pegging this currency, and gives everyone equal say at the table. So when you talk about what would be the nuclear option, Saudi Arabia stands up with all of the 13 producing OPEC countries, all of these countries that are now joining BRICS that is approaching 85% of human population. And they say to the West, which if you think of who the West is, US, Canada, Australia, Japan, UK, and parts of Western Europe are all broken, insolvent, massively indebted, and have pissed off the world. And I think you would see something like this on a Sunday night. Thanks for the memories, guys. It's been a great 50 years. But we are now part of the BRICS nations, as Saudi Arabia has come out and formally said they are going to join BRICS. Saudi Arabia formally announced they are joining BRICS. They did that a few weeks ago at a meeting in South Africa, which was also confirmed by the South African president. They're joining BRICS. And if you think about it, 6 of the 13 OPEC producing countries are already on BRICS, a part of BRICS. The 7th, United Arab Emirates, just joined the BRICS banks and has announced intentions to join BRICS. So how far-fetched would it be to see, before I even say that, what are we doing? We're going green. You have Biden up on stage telling the Paris Climate Accord that we're sorry for dropping out, that we're going to pay $200 billion to developing nation countries for all the pollution that the West creates. And well, by the way, we're going to continue to push away from fossil fuel and combustion engines, and we're going green. Now, why would Saudi Arabia want anything to do with us? Why? When they can join BRICS, which is 85% of human population that has no intention of being green and green. They'll all be digital, but not green. And so what we represent to Saudi Arabia is a threat to their existence. What the rest of the world represents is opportunity, including in particular China and India and Russia. And you put it all together, all these countries representing military might well in excess of ours, a GDP well in excess of ours, and human population well in excess of ours. And what happens if Saudi Arabia stands up on a stage on a Sunday night, arm in arm with all of the leaders of the 13 OPEC producing countries, with Xi Jinping, with Putin, with the president of India, the president of South Africa, all of these nations in a giant chain with their arms around each other's, and they say, thank you, it's been great, appreciate it, but we are going to issue oil in the new BRICS currency now. And with the rest of our OPEC producing brothers and sisters. And thanks for the memories. Like that, it's over. As the world will massively dump dollars, massively. They don't need to hold them anymore. They'll be able to buy oil and take part in a currency that is pegged to commodities. Every one of these countries have been massively accumulating gold. Every one of these countries want to join BRICS. Why would Turkey buy more gold than anyone in the world for the first 7 months of the year? And then they announce they're joining BRICS. Do they know what's coming? Have they been told, oh yeah, gold's the only other tier 1 reserve asset? That's right. Why are these super private and well-informed investors draining the London Metals Exchange and COMEX of all its metal to where the London Metals Exchange has the least amount of silver ever in the history of the exchange since they started taking records? Why has 70% of all the registered silver been drained off of COMEX over the past 18 months? Why do we see in one day, 2 months ago, 45% of all the kilo bars in gold, 26 million ounces gone in one day delivered off of COMEX? Who's got that kind of bread? Why do we see 2 weeks after that, 5% of all the 100-ounce gold bars on COMEX delivered off of COMEX? Now, I want to make a point about the deliveries off the exchange. When you deliver a bar off the COMEX exchange, it's a one-way street because you no longer have the liquidity. In the case of silver, we have a really robust Brinks storage program. We have worldwide exclusives that Brinks has given us. And I believe our storage program for Miles Franklin is the envy of the industry. That's not what I'm talking about. But we had some very large orders recently that some of them have become public because one of the clients that I did an order with wanted me to tell the world how difficult it was for her to get $50 million out of the bank to place an order with us. It took her almost 5 days. And she wanted me to tell everyone that get your money out of the banks because it took me 5 days to get my money with threats of calling the regulators to get my money out of the bank.
Wow.
And so if you Google silver whale Andy Schectman, there's all sorts of videos that took place. This was over July 4th. But she wanted to store a majority of her metal in a different location other than Brinks JFK, where I hold a lot of this stuff. And I was advised to tell her, hey, you may want to tell her to keep it at Brinks JFK because of all of our Brinks facilities around North America, there's about 9 of them. That is the only one that is COMEX approved. And what that would basically mean would be, look, you have liquidity. If you're buying 1,000-ounce bars, that's what she was buying, 1,000-ounce silver bars in a portion of what she bought. This is a different client anyways, but I had two very large orders, and the one public one bought American Eagles. The second one that we did bought 1,000-ounce bars. And we were told on a $35 million transaction in silver to keep it tell her to keep it at JFK. And I said, well, why? And I said, if it's in Brinks, Salt Lake City, as an example, they have just the same liquidity, right? Yeah. But if Elon Musk says, I want to pay $12 over melt value for anyone who wants to sell me their 1,000-ounce bars for our Tesla program, like that, people could sell it, bang. Not if it's off of COMEX. It has to be reintroduced and reassayed. So anyone who pulls metal off of COMEX like this, these massive deliveries we've seen, where in one day all this stuff is disappearing and this bleed down of supply, normally they would take it out of one category called registered. Those are the bars that can be delivered, and move it into eligible. Those are bars that they're eligible if I want to put them into register, but they're not for sale. They're mine. I'm hanging on to them. Not for sale. Well, and that's what a lot of people would do. They would just keep them in an eligible category. Well, instead of doing that and leaving them in the safety of an eligible category, like our Brinks program at JFK is eligible. That means if one of my clients who has a whole bunch of 1,000-ounce bars wants to sell them and take advantage of Elon Musk's generous offer, we could transfer them from eligible to registered, and Elon could then take possession of them. Registered means all of the numbers are already validated on the bars, the weights, the bar numbers, the authenticity goes from eligible to registered. He can take possession of them and pay me my money, but not if they're not in the COMEX ecosystem. So when all of this stuff is delivered off of COMEX, it's a big deal. Where's it all going? I'll talk about that in a second too, because I'll talk about it right now. How about, there was just an article by Reuters just the other week, and Bloomberg, and it said that the central banks bought a record 399 tons of gold worth over 20 billion in the third quarter of this year, 2022. 340% higher than Q3 2021, almost double the previous record of 241 tons in Q3 2018. Also marks the 8th consecutive quarter of net purchases and lifts the year-to-date total of 673 tons. And that's higher than any full year since 1967, and there's still a few weeks left to go in the year. But Bloomberg called the buyers of all of this gold and silver mystery whales. And they postulated that the mystery whales buyers were likely either China, Russia, Saudi Arabia, or India. Where the hell have we heard those names before? Oh yeah, BRICS. So Bloomberg is saying, we don't know who bought it all, but we think this is who it is. And they also noted that the central bank purchases were nearly double the previous record. So what do all of these countries have in common? Yes, they're BRICS. But what was interesting about that was that of the 400 tons delivered, only 120 tons were, they knew where it went. The other 2/3 of it, they just knew it left the country and was going that way. And they surmised that's who's buying it. So you are seeing massive drawdowns, huge amounts being drawn down off the exchanges. And it's a one-way street, because once it leaves COMEX, it's lost its liquidity, unless you don't give a crap. And I'm going to take possession of it in India or in Saudi Arabia or in China. Give me your gold. I don't care. I'm never selling it on your exchange again. And that is something that we are seeing. So when you talk about these deliveries, these massive drawdowns in metals, it's been happening since I started talking about the others in 2020. It has not stopped. In fact, it's increased massively. And who's been buying more gold than at any time since 1967? Oh yeah, the central banks. Well, why are they buying gold and silver? Oh yeah, gold's tier 1 reserve asset, and everyone's moving away from the dollar. And you see how all of these things start to come together? And
absolutely, yeah.
Yeah, and so the bottom line, and I guess we'll stop and I'll answer some questions if you have any, is that I think we often take the dollar's reserve status for granted, simply because we've grown up under this system. But the truth is that reserve currencies come and go every 100 years or so. And the dollar was the only choice when we moved to a full fiat currency system because of Bretton Woods and the trillions of dollars that had all been circulating globally. But I think that we are looking at a period of time right now where these countries are beginning to break away and accentuate themselves against the centuries old Western dominance. And I think the handwriting is on the wall. We will wake up at some point, probably sooner than later, to a new system that will challenge the dollar for its world reserve. And God forbid Saudi Arabia and OPEC say the dollar's done as the only settlement currency for oil. They're already selling it to China for the yuan denominated bond. You already have China saying to Russia just the other day on Tuesday that we are ready to get serious right now and build the energy infrastructure with Russia and the other BRICS nations. You can see it. It's happening. And when that announcement is made and OPEC and Saudi Arabia dump the dollar as its sole settlement currency, and all of these countries on the planet who have had to own dollars for 50 years begrudgingly start to sell them because the dollar becomes a hot potato, this is your great reset moment where the dollar comes flooding home, creating massive inflation, hyperinflation. And the byproduct of inflation is higher interest rates to compensate for the loss of purchasing power. As rates skyrocket, and this is what I get back to originally saying, did the Fed do this purposely? Do they realize that if they are the ones that raise rates high enough, that they will be the ones in history books known for blowing everything up? Or would they rather incentivize a villain? Would they rather have a villain like Putin, like Xi, like OPEC, who say, we're out? I mean, they're going to weaponize the dollar. They're going to take our money and our assets. They're going to sanction us. They're going to kick us out of SWIFT. So let's sell all our treasuries. Let's coalesce. Let's suck Saudi Arabia and let's suck 85% of human population and rallying cry against the West, but the glue that makes it stick, because the euro was a rallying cry against Western or against the US hegemony, didn't work. Too many actors moving in too many different directions. But how about pegging it to a commodity where you have the glue that makes everyone's voice equally heard because they've all pegged it using distributed ledger technology? It's coming. And I think when that happens, when Saudi Arabia makes that announcement, it will be on a Sunday night. We will have no time to react. And I will leave you with this before I entertain any questions you have. I know I've monopolized a good hour here. I apologize, but sometimes I get on a roll, I can't shut up. And that is simply this. I really do believe that if you are not a contrarian, you will be a victim. I really do believe that if you are fully invested in dollars, you're destined to go broke. And I want people to know that when I talk about gold and silver, it is never, ever, ever, go back and listen to anything I've said for the past decade on YouTube's or on any speech I've ever done, including that one at Rick Rule's conference in 2017, The Art of Financial War, which is on YouTube. Gold is not an investment. Silver is not an investment. It may perform like one, may make you wealthy, but what they are wealth. 5,000-year wealth that has outlived every world war, German hyperinflation, the Great Depression, and every pandemic. And when you see the most well-funded, well-informed, influential traders on the planet accumulating the stockpile of metal that they are, when you see a company like JP Morgan, who paid a $920 million fine to the Justice Department for suppressing gold and silver, accumulate, according to Ted Butler, over 45 million ounces of gold and 1.2 billion ounces of silver, 12 times what the Hunt brothers tried to buy, the largest physical position of metals ever owned off their books. When you see the most sophisticated, well-informed, influential traders on the planet massively accumulating metals and de-dollarizing, whether it be the US commercial banks or the foreign central banks, when you see the rise of the others, the most influential and well-informed private traders draining the London Metals Exchange, draining the COMEX, when you see gold reclassified tier one, when you see all of these countries coalescing, when you see all the 13 OPEC producing countries on the Belt Road, the US isn't part of it. When you see 200 countries at the IMF from around the world say we want a new system, why did they choose gold as a tier one reserve asset? Why not special drawing rights from the IMF? All of these things put together in and of themselves, okay, put them all together and look at it as a sphere. and you can see the dollar screwed. You can see the West is living on borrowed time. And you can see they are putting everything together right now. You can see something that they just did called the M Bridge. The M Bridge is a new technology that allows cross-border payment of central bank digital currencies. It was just done by China, I think Singapore, and the United Arab Emirates. It was like a 40-day test, and it worked. And now all of it sidesteps the intermediary banks of the West, or SWIFT. When you see them build something called CIPS, CIPS, the cross interbank payment system, sidestepping SWIFT, all of these countries will sign on to CIPS. All of these countries who will have the ability to trade central bank digital currencies cross-border until they unite. When you see all of this stuff together, if you don't see the fact that being in dollars fully and exclusively is a very bad idea, then you're not looking at the world the way that I am. And I think it's just a matter of time before people in this country have a religious experience, because when the dollar gets dumped by OPEC, which it will, you can see it. You can see the fact they don't even take Biden's phone calls. They are joining BRICS. They're moving away from the West to a massive majority of human population that is not going green. It's coming. And this is why you own gold and silver. It is wealth. This is why they're buying it, because it's wealth. It's not an investment. It's wealth. And I strongly urge people to listen to what I'm saying and to consider owning gold and silver as significant historical wealth, and not rely upon a dollar, which is at the end of its Keynesian fiat experiment, and it's coming to an end. And I think it won't be a pleasant experience.
Yeah, I know you talked a lot about the BRICS nations building CBDCs of their own, or really just one CBDC that they're all pooling into. But you also have the Fed talking about their, Fed Now CBDC program. I wonder, do you see that at all? I mean, playing into the SIPS kind of system, maybe the Fed decides to play game with the BRICS, or is the Fed Now something you see that they'll do separate from the BRICS still? Or
I think they'll be separate and autonomous, but that's what the M Bridge would allow, trading, because they don't want to be completely isolated from the West. And this M Bridge will allow central bank digital currencies to trade cross-border. And I think, that's happening, no question about it. Look, the BIS told the world that any of the BIS countries, Bank of International Settlements, anyone who's part of that would have to have a central bank digital currency by 2025. I knew it when Nancy Pelosi said virus would live on currency. And I was screaming in 2020, you're going to have a central bank digital currency in this country. And I think they will peg it to gold. The Dutch finance minister kind of shocked the world the other day when he came out and talked about a gold revaluation account that every country has. At the end of World War II, we talked about gold being pegged at $35 an ounce. All of the gold that these European countries have is valued at $35 an ounce on their balance sheet, and they're not allowed to offset it with liabilities. In the US, I believe it's $42.22 an ounce. And I forgot the reason why it's higher in the US than it is in the rest of the world. But suffice it to say, he talked about the fact that everyone's balance sheet is upside down because all these countries had to buy sovereign bonds by creating money out of nowhere. And with rates going up, the bonds are getting killed. And he said, look, all of us have this gold revaluation account on our balance sheet. It's the gold is held in a GRA, gold revaluation account. Well, it's interesting. All they would have to do is jack the price of gold, not only from 35 where it's on their balance sheet, but 1,800 where it is now, or how about 5,000? Revalue it to 5,000 an ounce. It doesn't look. This picture right here, that's President Roosevelt. That's his gold executive order. He confiscated this and the gold certificates, and then after everyone's gold was called in, he revalued gold or devalued the dollar by 40%. So the gold was up by 40%. For them to do that would be no different than what they've done in the past. For the U.S. or these other countries to revalue gold in their gold revaluation account. Maybe this is why all the countries are going on a massive buying spree of gold. Maybe this is why gold is reclassified tier 1. Maybe this is why the central banks have repatriated all their gold. Give it back to me. I want it because it's going to be part of a new system. When you have screwed the world through fiat currency for so long, you need to have it pegged to something. How about gold? How about using central bank digital currency to show the veracity and the immutability of the gold pegged to the ledger? So I think it's coming, and I think that they will revalue gold, maybe 5,000-10,000 an ounce, and then their balance sheet is whole. Bang! You move gold to 10,000 an ounce, and the 100 trillion in debt we have all of a sudden doesn't look so bad if you move gold to 10,000 an ounce, let's say, or whatever it may be. I don't know. It would help get all of the balance sheets solvent, and this is something I believe is coming. So there's no other reason for all of these banks to be accumulating gold the way that they have, to be repatriating it, and to see gold reclassified. You know it's going to be part of a new system. And when you see the Russian finance minister say, our new central bank digital currency will be pegged to commodities, it's a foregone conclusion in my mind. It's just what trips the switch. When does it happen? This is why you need to be proactive and accumulate this stuff, not as an investment, but as wealth. Because if the dollar gets dumped, you will understand immediately why gold and silver are so important if the dollar gets dumped globally. And I think that's just a matter of time as well.
Yeah, it's like all indicators are pointing to a return to a gold standard in some way, and a death of fiat currencies as they've been. I'm curious, with CBDCs, do you think that it'd be likely that any sort of alternate cryptos, whether it's Bitcoin or Ethereum, would be dumped along with other risk assets? Or do you think even
almost all of them will be dumped? I think cryptocurrencies are going to be, look, I think you could argue that the government let this deal happen with FTX or whatever it is, specifically for people to come in and regulate, for the government to come in and regulate. And most of these shit coins won't stand up to any scrutiny or any type of regulation. There will be some. I think that the concept of cryptocurrencies and distributed ledger technology and decentralized and all this stuff, the concept is solid. Most of these coins, I think, will be gone forever. There might be some that survive, but I think these governments don't want to compete with other currencies, and of course the decentralization. They don't want to compete with Bitcoin, and people who think that Bitcoin will be used to back any type of new currency, I think are foolhardy.
Central banks aren't buying Bitcoin, they're buying gold.
I think Bitcoin has a place, but I don't think it's going to be a currency that will be embraced by central banks. That's for sure. They're going to get their own central bank digital currencies, but who knows how low Bitcoin can go when we see the fallout of this FTX deal. We haven't even seen the fallout of it yet. And when you look at like the great financial crisis in 2008, the seeds of it were sowed in the mortgage industry in 2007. So a lot of the things that we see are often a year or so after the initial shock. And so I don't know. I'm not a big crypto guy, and I think now is a very risky time to bet on cryptos. If I were going to own any, it would be Ethereum and Bitcoin would be the only two that I would probably own, just because they have, I think, a fighting chance. But I don't think it will be anything in terms of relation to a central bank digital currency.
Yeah. And I know you mentioned that at least for Western nations, this coming shift is going to change the way of life for a lot of people. Is that almost referring to this dumping of dollars, and then that causing all other assets to go down dramatically, and almost a wealth collapse in Western nations?
Absolutely. Okay. And you're seeing countries move away. I mean, just the other day, the Eurasian Economic Commission, they extended a proposal to the BRICS nations, and the Eurasian, the EEC as it's called, are Those are that's Russia, Belarus, Kazakhstan, Kyrgyzstan, and Armenia, and they've been around for a long time. And anyways, through their regulatory body, they issued a proposal to the BRICS currencies and to the BRICS Plus, which is kind of the G20 of the South, the global South. They said, we want to introduce a new single payment card in direct competition with Visa and MasterCard. And it merges the Chinese Union Pay, the Indians RuPay, the Russians MirPay, Brazil's ELO, and others. And it's a direct challenge to the Western designed monetary system. And so, you know, when you talk about the new program that the Fed is working on, who's involved with it? MasterCard. So you got MasterCard and Visa in the West versus the rest of the world. And I mean, that's kind of a generalization, but even when you start to move away, like find credit card alternatives to the Western system, all of it sidestepping SWIFT, all of it, you pull SWIFT out of the equation and you can't stand up to all of these countries militarily because together they're bigger than you. What do you have? Where is your ability to sanction? Where is your ability to hurt people financially if everyone is moving away from the Western system? And that's exactly, I think, what we are seeing. So look, this is a deal where you have a deal that this union of countries seems to have the ability to meld these countries together, even those that have different attitudes, in pursuit of something far more virtuous, and that would be economic prosperity free of the Western hegemony. And this is the rallying cry that all of these countries are really turned on by, and the ability to have equal footing and equal say at a table by pledging commodities that the whole world can see on a distributed ledger is just, to me, it's obvious, and it's coming.
Yeah. Well, I'd like to give you some time, Andy, right at the end here to let my viewers know where they can find you. But it's very interesting just to hear what everything you've laid out, because it does really bring to mind the statement that there are decades when nothing happens and there's weeks when decades happen. And yeah, I think that's what we're beginning to see, is big things are happening very quickly. But thank you so much for coming on. And
the pleasure is mine, man. So we've been in business now for 33 years and we've done things old school. We have a website that's complete horse crap because you can't buy online on it. And when I look at the level of prominence we've reached without an online presence, it makes me very happy. And I've acquiesced, and we have a new website that is going to be launched any day now. In fact, I think we're soft launching it today or tomorrow to our inside brokers just to run the bugs out. But our website is milesfranklin.com. The new one will allow online purchasing, and it will be out soon. If people would like, you know, we've been in business 33 years. We're one of only 27 U.S. Mint authorized resellers. We've never had a customer complaint. We're licensed and bonded in the state of Minnesota. Even though I live in Florida, our corporate office is in Minnesota, and that's the only state in America that mandates regulation in the industry. If people want a current price guide or price list of items until our website is done, they can send us an email at info@milesfranklin.com. Say Logan Moody sent me, and we'll make sure that they get the questions answered as competitive a price as they'll find anywhere in North America. If they want to talk to a broker, they can. All of our brokers have decades of experience combined, and we'd love to work with your listeners. I'd love to come back on and follow this narrative and see how it unfolds. I think it's going to start to get very exciting. And to your point, I think you'll see decades happen in days before it's all said and done.
Yeah, well, thank you so much, Andy, for coming on. I'll put the link to your website down in the description below. And yeah, I hope to have you on at some point when we're seeing more of this beginning to happen as well. So thank you.
I'd like that. Let's see how this all unfolds, because I think you're going to see it start to really ramp up in speed. Once the infrastructure is laid, it's going to be a quick process.
Yeah. Well, take care, Andy. It was really
You
good
too,
talking with
brother.
you.
Good to see you, Logan. I look forward to picking up where we left off real soon.